We are live. Welcome, welcome. Everybody is coming into the meeting now. Awesome. Alrighty. So while everyone's joining, I can just getting some feedback. Alrighty. All right. So just going to mute everyone for now while I get started. So thank you guys all so much for coming out to tonight's first-time homebuyers webinar. So just to introduce myself, so I am Sam Thompson. I am a mortgage agent in the Barrie Simcoe area. I work with Joe Bladdock, who is probably the Facebook page that got you guys here. And I'm happy to be joined tonight with Shawna Toole. Again, Shawna lives in the Barrie Simcoe area, but has been doing a lot of deals up in Sudbury, North Bay. So she is going to be our real estate expert for the evening. So just to give you guys a quick rundown, I've written it in the chat of tonight's schedule. So I will be starting off with a small talk on the mortgage process, all of the boring numbers, but things you should know. And then Shawna's going to take over and chat a bit about the home buying process, sort of what the market looks like, and really what to expect, when working with a real estate agent, and some things to be aware of going into the first time, buyer's market. So without further ado, I can just go ahead and share my screen and I can get started here. So share screen and present. Awesome. Okay, so welcome guys to the first time home buyers webinar. So I will be covering off the mortgage broker process, how you get a mortgage, some of the top mortgage mistakes that we see clients commonly come into the office with. We'll go over how to get some money back when you buy through some grants and rebates that are available to you just because you're a first-time buyer. I'll also cover off some ways to get a down payment, and then I'll end off, chatting about the first-time home buyer incentive. So a little bit about myself. So again, licensed with all banks and lenders. We're working here at Verico Mega Mortgage. So I'm a first-time buying expert. That was the title dawned on me just because I work with a lot of the first-time buyers that get filtered through the office. So any questions that you have, regardless of what stage you are in the process, I'm sure I've heard it all before, and it would be, I'd love to just chat through any questions you have. So contest announcement. Before I get too ahead of myself into the depths of mortgages and numbers, facts, figures, I do want to just announce that we are hosting a contest to win a $25 gift card to Tim Hortons. So it's actually a win-win because how you get an entry is just by scheduling a pre-approval appointment with myself. So there is going to be a link that is also in the chat right now, or you can alternatively email me at sam@home-buying-seminars.ca to book your appointment. And we would really just love to see you get a pre-approval appointment, end up with a pre-approval, and be able to get some coffee because Joe and myself very much like coffee. Tim's is a question of debate whether it's McDonald's or Tim's Coffee, but we're going with Tim's for this one. Before we get started, I want to cover off just a quick case study of Jennifer and Joseph. So they came to our seminar. Yes, a seminar, not a webinar, when we used to have them in person. And they only had about $1,400 in their bank account. They didn't know their credit score, and their household income was around $65,000. So this may sound familiar to you as a first-time buyer. Some of the numbers might line up. And what happened was just a couple months after coming to our webinar, getting a pre-approval, they were into their home making biweekly mortgage payments of just under $500. And you can see their awesome comment for us. So really, I really like this case study because it illustrates that regardless of where you are in the process, we can really work with you, whether you know your credit score, you have a down payment saved, and you have a purchase price in mind, or whether you are, completely new to the whole process, and don't even know what your credit score is, don't know what a credit score is. We can work with you to help achieve your home ownership dreams. So where do you start? You're going to start by getting pre-approved. It's a super important part of the process, especially in today's super competitive market. So a couple things it does is avoids disappointment, speeds up the process, and can save you thousands. So really the last thing that Joe and myself at the office want to happen is for you to be looking at houses with Shawna and, the $550,000 price range, only to find out when we actually do your pre-approval and look at your income, you only qualify for about 400. So by doing a pre-approval, it gives you sort of an accurate first stepping stone to know where you can go from there and what houses that you can actually look for. It presents a stronger offer, and the seller takes you a bit more seriously because they can see that you have actually had your income approved by a lender. And it also guarantees your interest rate for 90 to 120 days. So even though we're not really expecting rates to rise, it's good to have that rate hold guarantee covering you for about 4 months. So how do you get pre-approved? So usually it starts with a text. Anyone who's looking to get a Tim Hortons gift card will start the pre-approval process by booking an appointment with myself. But it's done completely over the phone. It can be done over text or email. And a lot of the times now we do them over Zoom so that there's, some sort of face-to-face. But we don't have to meet at any point during the entire process, which again, it does eliminate the need of taking time off of work. I've done quite a few meetings with a couple of young couples where the kids are sleeping in the background and one of them has to leave every once in a while to check on them. So Zoom has actually made it really awesome and easy to meet with everybody. The only things that you need are going to be your pay stub as well as photo ID. The rest of the documents you can just send via text or faxed, but most of the process is done completely over text or email. So why do Canadians use brokers? A lot of people may be thinking, I already bank with CIBC. Why don't I walk into my branch and just get the mortgage from them? So brokers actually have the ability to offer way more products because we're not limited to just one of the big 5 banks. There are a lot of different lenders that we work with.
Hi, baby.
It also is important that we can protect your credit score by only doing one credit check across all of the lenders that we work with. So rather than getting a different credit pull at each different bank to get your pre-approval, we can just do one hard hit, and that's valid across all the lenders that we work with. We also know that buyers have a unique story. So sometimes, there's some credit discrepancies or things that come up when we're looking at your file. And we're actually the ones that are communicating to the underwriter on the other side at the specific, bank or lender that we submit your application to. So we really get to advocate for you and to explain to the lender your scenario. And usually we see that actually does go a long way because of the relationship that we have with the specific lenders. And one of the most important things is using a broker is completely free. We don't get paid by you at all during the process. We actually get paid directly from the lender for providing you as a client. So nowhere in the process do you pay us anything. Here are a few of the banks and lenders that we work with. Some of them you might recognize as, your own home bank. Some you might not recognize, but most of them are actually, or some of them are funded by some of the big 5 banks. I mean, I know First National, maybe none of you really know much about First National, but they're actually funded by TD. So this just really, gives an illustration of the mortgage products that are available to you. Finding mortgages that fit is a very broad stroke sentence because there's a lot of things that you could be looking for in your potential mortgage. If you're looking for a short-term or a portable mortgage, if you're looking for a new build, if you're building it yourself, if you were going to do a purchase plus improvements mortgage, we can really look at your scenario and discover, what strategy and what lender and what mortgage is going to be the best fit for what you're looking for as a buyer. Back to the coffee. Brokers on average save their clients an additional $42 per month compared to the traditional bank. So we've done the math, and that works out to be a small Timmy's coffee every weekday of the month. So by getting a mortgage through us, through a broker, we actually essentially buy you a small coffee at Tim Hortons every weekday of the month. So now that we've established the difference between, going to your bank versus using a mortgage broker, let's just look at some of the mistakes that we see a lot of first-time buyers make, and a lot of them they don't necessarily even know that they've made. So mistake number one is ignoring your credit score. So we really don't want you to get stuck with a bad rate because your credit score, isn't high enough to qualify you for, the day's best rate. And the only option we have is to go with a B lender where, rates can be up to 8%. We really want you to know what you're expecting, be able to make improvements on your credit if they exist, to get you, the best rate on the day for your mortgage. So it's really easy to check your credit score. You can either get a super accurate one from Equifax or TransUnion, which you pay for. Alternatively, there is sites like Credit Karma, or a lot of mobile banking sites also allow you to do a soft credit check. It's going to be a little bit different than the one we pull from Equifax, but it gives you an idea of where you stand credit-wise. Also, if you have gone through a bankruptcy or a consumer proposal, it's really important that you let us know right off the bat. And it is possible to get a mortgage. We just have to do a couple things to get you started. So we really want to stress the 2-2-2 rule, which is just that banks are not going to lend you a mortgage until you have had 2 credit cards for a minimum of 2 years with a $2,000 limit. Sorry, not balance. So if you are discharged and you haven't done that, it'll be your first step is just getting those 2 credit cards and starting your 2-year timeline. Looking at credit scores, how they range and how you fare. So if you know what your credit score is, if it's anything above 680, you have really no reason to worry. We can get you the best rate of the day, and a lot of the mortgage insurers, or all of them, have their cutoff at 680. Anything below 600 into the 500 range, it will need a bit of work. But again, by chatting with us either through a pre-qualification or a pre-approval appointment, we can chat about maybe some ways to help build your credit. So if you look at what goes into a credit score, you'll see the biggest portion is actually credit history. So this is just the length that you've had that credit account. So if you have any old credit cards or lines of credit from college or university or even from high school, the minute that you close that account, you actually lose all of the credit history that's associated with that account. So you can actually see almost a negative effect. And you even see that on sometimes when you have a loan that's currently in repayment. When you pay off the loan, you might actually see that your credit score decreases. And that's just because the credit history associated with that loan account is now closed. The second biggest slice of the pie here is going to be debt owed. So given the 2 circumstances here, having a $900 balance on a $1,000 credit card or a $900 balance on a $10,000 credit card, you might think that because the value is the same, it's both a balance of 900, they'll be marked as the same. But really, having a $900 balance on a $1,000 credit score will actually hurt your credit more than if it was on a $10,000 card, because it's showing the lender that you are using 90% of your available credit. So it's little things like that that can all affect how your credit score is calculated and what your credit score is. So mistake number 2 is not reviewing your options. So as I stated earlier, there's a lot of different rates, lenders, ways to pay, penalties. We don't want you to come in, one-track minded because of one, rate spy article that you read that this is the best way and this is the best mortgage option for me. Coming with an open mind really lets us customize and maybe give some suggestions or options that you weren't previously aware of. So looking at rate options, so 2.24 versus 2.39, is there a difference? So other than this being, a pretty standard, almost standard high fixed rate for right now, there actually is a big difference. Even though it's only 0.15%, that works out to be about $1.50 almost a day $42 a month, and over the life of your mortgage, just under $10,000. So really, you want to have an agent or a broker in your corner that is getting you the best deal that you possibly can. Different banks. I went through some slides earlier that had all their awesome logos of the banks that we work with. So running your specific scenario by each of the banks can result in significant savings. So again, this is things like certain lenders that are offering promotional cashbacks, or some special rate programs available. So by looking at what you're looking for versus, the different offers that the banks are offering, we can get you, the mortgage that's going to fit you the best. Monthly versus biweekly payment options. So is there a difference? Yes. So a biweekly payment option, because you are making 26 payments per year, it actually does lower the amount that you pay in interest, and it can shorten the lifespan of your mortgage over time. So you'll see on the chart here, it's illustrated as the yellow bar being biweekly. And penalty calculations. So this one is often very overlooked. People don't really consider, what's the penalty if I break my mortgage? If I'm signing up for it, why would I need to break it? Well, we know that life happens, and sometimes the only option is to maybe sell your home in the middle of your term, or, like a lot of people did last year, if you see the rates are dropping to, 2% where they were previously, at the high 2.8+%, and you want to refinance, those are all going to incur a mortgage penalty that you'll have to pay. So a lot of the big 5 banks that we see, specifically even TD, last year, late in the summer, I believe, there was an article that came out of a couple that needed to break their mortgage, and they were left with $20,000 in a penalty fee from TD. So we really want to find, whether it's fixed versus variable to help with your penalty, or picking a mortgage provider that's going to offer a softer penalty in the event that you need to break your mortgage. Mistake number 3 is borrowing too much. So simply enough, don't borrow too much. We don't want you to borrow more than you need and end up house poor. We want you to be able to live in the home that you've purchased. We don't want you to extend yourself to the maximum ratios and not be able to, keep up your Netflix subscription or keep ordering in from Uber Eats. We want you to live in the house that you've purchased. And also on the topic of borrowing before you buy is a very big it's a big don't do for mortgages. Even if it's been approved, you have your offer in, up until the closing date. If the lender does, they can check again on what your credit is. And if they see that there is a new car loan that has $300 in monthly payments, that could throw the ratios way off and actually could kill the deal. So if you have been approved, even if it's on a live home, don't add any additional loans to your name until after the house has fully closed. And forgetting about closing costs. So I still haven't changed it. It does say closing costs worksheet. When we did these seminars in person, we had an awesome laminated paper that I guess it's not laminated paper, but a laminated sheet that covered off all of the closing costs. But you'll actually get it just via email now. So look for it to be about 1.5% of the purchase price, but closing costs is often that sneaky thing that comes up on first-time home buyers, that they think, I've already made my down payment, that's all I need to do. The mortgage takes care of the rest. But there is closing costs that do have to come out of your pocket as well. And mistake number 5, my last one, is just not getting pre-approved. Getting pre-approved is very simple. It can take, a 30-minute phone conversation with myself. You just need your ID pay stub. It's completely free. And we can do it completely virtually. Even if you don't want to call with me or video with me, we can do it completely over email if that suits your lifestyle and your availability better. Once you have your pre-approval set up, the next step is to set up your home buying team, such as a real estate buyer's agent like Shawna. Shawna might go into this later, but it's really important that you use a buyer's agent rather than relying on the seller's agent to act on your behalf as a buyer. You're also going to want to look into having a home inspector lined up, an insurance broker, as well as a real estate lawyer. Because once we get into the firming up stages of your purchase, you're going to need to be able to instruct your real estate lawyer to us so that we can get them communicating with the lender. So the second case study I want to go through is just down in Tavistock, Ontario, and it was a purchase for over 1 acre of land. So the purchase price was $329,000. They put in a down payment of $16,450, and they were making bi-weekly payments just below $700. So after 5 years, the market value of this home had gone up to $419,000. They had refinanced, so their mortgage value was a bit more, but even with the higher mortgage value, they could still sell and take almost $140,000 in equity to their next home in 5 years. So this is just illustrating the snowball method, and it's also a hint or a pointer to be easier on Shawna, because your first purchase doesn't always have to be your forever home. Sometimes your first purchase is just to get you into the market, and then you can roll the equity over into, a bigger house if you're looking to expand your family. How to receive first-time buyer grants, rebates, credits, and refunds. Look at all of those buckets of $20 bills. If you have a pen and paper, this is going to be a really important section, because it is all of the ways that you can save money and all the rebates and incentives that are available to you. So first-time buyers are entitled to a refund of approximately $1,000 if you purchase an energy-efficient home. So as a first-time buyer, you'll receive a refund of 10% of your CMHC insurance premium if you purchase an energy-efficient home. So if the purchase price was about $425,000 and you purchased with 5% down, the refund works out to be about $1,100 back into your pocket. As a buyer, you are going to have to pay Ontario land transfer tax. So as a first-time buyer, you are entitled to a refund of approximately $4,000 through the Ontario land transfer tax rebate. So if you are looking at purchasing in Toronto, I don't think anyone is at this point, but if you are, there is an additional Toronto land transfer tax. So they give you a rebate for that as well. So if you were able to if you're a first-time buyer, purchasing in Toronto, the total rebate available to you would be $7,725. New to Canada benefits. So this is an awesome incentive that is available to you if you are a permanent resident in Canada within the last 5 years. So what they've done is they've actually reduced your employment requirement to only 3 months. Traditionally, it's going to be 3 years, and there's no credit score required. So they will just use bank statements, phone bills, and insurance statements to calculate sort of where your credit is at. HST rebate. So this is important if you're somebody who was who's looking to to build your own home or purchase a new home from a builder. Because it is a new home, you will have to pay HST on the purchase. But as a first-time buyer, there is a rebate to help cover that HST cost. So for example, if your new home build was valued and purchased at $425,000, the rebate works out to be about $33,000. So really important if you're looking at buying from a new builder or if you're looking at building a home yourself. There's also a tax credit that's available to you as a first-time buyer. So this will be filled out the year after your first purchase, and it's actually just a line on your income tax form where you can fill in that line $5,000, and it's available to you, again, just because you're a first-time buyer. So if a family with a household income of $85,000, that works it out to be just over $2,000 back to you. Free 1-year home warranty that's available to all first-time buyers. So there's a few of the lenders that we work with that offer a free 12-month complimentary time frame in a home warranty. So it covers any home heating, air conditioning, electrical, water heater, and plumbing issues that might arise. So up to $10,000 in repairs are covered with no inspection required. So we like to say that, Murphy's Law, if if anything's going to go wrong in your home, it's probably going to be within your first year of home ownership. So it's awesome that this lender actually has this warranty available to you. If you're having trouble coming up with a down payment, but you do have a an amount saved up in your RRSP account, you can withdraw from it completely tax-free through the home buyer's plan. So each individual home buyer can withdraw up to $35,000 or $70,000 per couple, completely tax-free. So that'll save you an additional $21,000 in tax. So this is really important if you have been if you've been saving into your RRSP and feel like your money is locked there because you don't want to have to be penalized from taking that money out. As a first-time buyer, you can use that money and put it towards your down payment. So for this one, you just have to be a first-time buyer, either a person with a disability or buying a home for a person with a disability, or if you just haven't owned a property in the last 4 full calendar years, you qualify for this incentive. How to get a down payment if you don't already have one. So all of these municipalities that are listed on the screen all have municipal housing grants, which will offer down payment assistance. So they do all run a little bit differently. So a lot of the facts and figures are sort of an average of what I've seen between all of them, but definitely reach out to see if your area has one and what the qualifications are. So typically you do have to be renting in the municipality that's providing the loan, and you have to prove that with lease agreements, sometimes up to 2 years in lease agreements. They will put usually 5 to 10% down towards the down payment of your first home. And the biggest, plus or positive to using this program, if your municipality has one, is that it's completely forgivable after 20 years. So if you have been living in your home for 21 years, the loan is completely forgiven and there's no repayment required. So this is a really awesome program because especially if this is looking like it's going to be your forever home, or you can stick it out for the 20 years, you don't actually have to owe anything back. So generally there is a wait list because it's municipally funded and there's lots of people that want to get in on the deal. And they each have income and purchase guidelines. So some of them have maximum household incomes and some have maximum either purchase prices, or they have a way to figure out your household income times a certain amount gives you your maximum purchase price. So other ways of a down payment can be through rent-to-own programs, gifted equity from the seller, or gifted money from family. We're seeing that families are playing a much bigger role in the home buying process because of the increase in the stress test, which is, it's making it a little bit harder for first-time buyers to get into the market. Okay, big breath. So now that we have gone through all of those options that are available to you, you can tally up if you were, to exactly tally and get a total of what all of the incentives saved you or gave you rebates for. The total savings are over $52,000. So I don't necessarily expect you to remember every single incentive I talked about or the dollar value of each of them. But the important thing is that we know what these incentives are, and we can properly steer you towards the ones that are applicable to you and get you the most money back when you get into your first home. Before I jump ahead into the first-time home buyer incentive, I just want to send out a second reminder that if you are looking to win a $25 Tim Hortons gift card, all you have to do is schedule a pre-approval appointment with myself. We'll chat about your income, your liabilities, some of the assets you have, and from there I can actually give you roughly what you would qualify for in a maximum house purchase. And from there we can look at some strategies moving forward, or I can even get that submitted and in for a pre-approval. So the link is going to be in the chat now if you would like to sign up and book an appointment with myself. All right, so the first time home buyer incentive. So how does it work? So it is a government funded loan, which enables first-time buyers to reduce their mortgage payments without increasing the amount they're paying in a down payment. So the incentive, it's not interest bearing. It doesn't require ongoing payments throughout the loan. So a couple of options that I cleared over actually require you to be making payments back on the loan, but this one doesn't. So if you're purchasing a resale home, it's going to be 5% that they can add. And if you're purchasing a new construction, it'll be either 5 or 10% added to your minimum 5% down. So let's just take a look at how that works out between two buyers here. So you can see their income is the same at $100,000 a year. The home price they're looking to buy is the same at $421,000 and change, and their down payment is still the same, minimum 5%. The only difference here is that we'll see the right-hand column has the additional 5% through the incentive. So you'll see sort of a trickle-down effect here where that lowers the insured mortgage, it lowers the mortgage insurance premium, therefore lowering the monthly mortgage payment. So you see each year you're saving just under $1,500. So all of that savings, they can be going towards a emergency fund. They could be saved up and put in as a prepayment back onto the mortgage. It could go for things like, any renovations that come up. If you're looking for a hot tub, whatever it is, that money's fully yours. And it just adds a bit of cash flow back into your pocket. So properties that are eligible include a very long list that's on the screen. I'm not going to read all of them out, but basically, if Shawna can find you a property, it is most likely eligible for the first-time home buyers incentive. So let's get to who can apply. So any Canadian citizen or permanent resident, or if you're a non-permanent resident, but you are legally authorized to work in Canada, you can qualify as well. So your maximum household income has to be no higher than $120,000, and the total loan value is set at a maximum of 4 times your household income. So for an example here, if your household income was $100,000, the maximum loan amount can't exceed $400,000. And it's also subject to all the qualifying income requirements, such as a traditional, mortgage would, of employment history and actually having the income to qualify for a mortgage in the first place. And of course, at least one of the home buyers must be a first-time buyer. What they also have done very recently this year is they've unleashed the first-time homebuyer incentive 2.0. So for anyone who's looking to purchase in the GTA, or if you're looking at moving out west to the greater Vancouver area or Victoria, they've actually increased the household maximum income to $150,000 and increased the borrowing max to 4.5 times. So this is aiming to give first-time buyers higher qualification in areas where it's tough to qualify with a regular incentive. So it actually increases the theoretical max from just over 500,000 to 722,000. So it's actually quite a big jump. So our mortgage team, so handling the difficult conversations. You can see us just at the Barrie waterfront there, having 3 tough phone calls. And that's really what we want, is we want to be the ones that are handling any issues that come up, to provide you with an easy and smooth mortgage process that's not, filled with stress of getting back to, realtors, getting back to us, getting back to the lender. We want to be the ones that are handling the issues for you so that you can just focus on getting the documents in. And, we aim to keep the process a little less stressful. So our mortgage team, you've already met me. I work primarily again with all the first-time buyers. So even if you reach out to our office for an appointment, you're likely going to talk to me. Joe Bladdock is the mortgage broker at our office. He's been in the industry for over 10 years, has a lot of knowledge. And then you'll also, if you reach out via phone, you'll meet Terry Lynn. So she works in our office as well. She's a mortgage agent herself, and she is incredibly knowledgeable with the mortgage process, and especially any documents that you'll need. She is really the document and fulfillment queen in the office. So if you call our office line, you're likely going to chat with Terry Lynn, and then from there, either Joe or myself. And before I pass it over, I do want to just introduce Shawna again with her phone number if you'd like to contact her. I'm also adding her email and her phone number into the chat as well, so that at the end of the presentation, if you're maybe you're already approved and you're here, you can reach out to Shawna and get the ball rolling with your awesome pre-approval in hand and start looking at some houses. So thank you. That's the end of my presentation. I just want to remind everyone again to get pre-approved. If you want to call or text the office, either of those numbers will do, or visit us at facebook.ca/bmortgagefree. So I will stop share and take a break from talking. I'm sure everybody is tired of hearing me. I will add in the chat the contest link one more time, as well as Shawna's info. And if you have any questions about all of the information that I just shared, feel free to write it in the comments below. And then after Shawna's finished, if you have questions for Shawna or me, let them loose, whether you want to unmute yourselves or just type them in the chat box. That works just as well. So Shawna, over to you.
Hi, everybody. Can everybody hear me okay? I hope so.
Yep.
Sorry, I'm coming to you from a hotel room. I'm actually up in the Sudbury area right now. My daughter is expecting a child, so and I've been selling quite a few homes here right now. The reason being, with Sudbury being still at a very good level of purchasing, what we're finding is a lot of people in the Greater Toronto area are purchasing more so towards north of Simcoe County, and people in the Simcoe County area are moving more towards the Greater Sudbury North Bay area, making prices of your homes go up. So as Sam said, getting a pre-approval is crucial right now, because a lot of times we're going to go out and look at properties, and because you haven't been pre-approved, it doesn't matter how much you offer on the house. They're not even going to look at our offer. So we really, really need to make sure that that's done for a few reasons. I've had people fall in love so deeply with the property that we've looked at, just to find out they couldn't get it because they A, weren't pre-approved, or B, didn't qualify because they can only afford something worth 300 instead of 350,000, and then they're discouraged and are unhappy. And so this is the major part of getting the first part of the pre-approval done, which is through the mortgage agent. And Sam and Joe are amazing at that. So and they seem to know all the incentives that are going to help us, believe me. Now, where my role comes in after you get the pre-approval done is to find you that perfect home. May not be a forever home, maybe it will be, I'm not sure, but you are going to have some wants and needs, and it's up to me to find those for you. Um, we may not get them all the first time around. Maybe you might say, okay, for now, this is okay. And then we'll step up a little bit later. And that's something that we need to discuss during the process, because the inventory right now, unfortunately, in Sudbury is extremely low. When I say inventory, I mean the amount of homes on the market. Compared to this exact time last year, the average household was, around $250,000, is now going for about 330 to 350 this time this year. We're going to see about a 15%, according to the stats from CMHC, which is the Canadian Mortgage Company, and the Bank of Canada. They're expecting us to increase another 15% by fall. So that's not good for you. Unfortunately, I'm sorry to say that, but good for sellers, but not good for buyers right now. But we're only going to see that in the northern areas just continue to go up and up and up, because southern areas just simply can't afford their homes anymore. They're almost being pushed north. And with everybody working from home, that's why we're seeing this big demand in people coming to North Bay, Sudbury, Peterborough, things like areas like that, because they can work from home. They don't have to work in Toronto anymore. They sell their townhouses there for 1.2 million and buy 5 houses in Sudbury for that. So that is why things are happening the way they are happening. Just taking this year alone, for example, coming in January, the stats that I just recently pulled up A house that was selling for about 231 is now just recently sold. Um, and I'm trying to take the lower level ones right now, but they started in January at 273 that were normally 231. Coming into February, the same price one went up to 306, and here we are in June. That same house is now going for about 323. Probably in September, we're going to see that same house go for about 356. That's why it's time to, if you are almost there, pre-approved or about to get pre-approved, it's time to do it now before we get to that 356. And now you have to find a smaller house because the other ones have gone up so much in price. And I know a lot of people are expecting the market to start dropping and falling out. It is, according to everybody, it doesn't seem to be going to happen this year at all. Um, and especially in the Sudbury area, because again, you can get a house in Sudbury for $400,000. In Barrie, Simcoe County area, you're going to pay $800,000 for that very same house. In Toronto, about 1.2. So that's why everybody that can work at home, they're basically flocking over there to you guys. I'm sorry about that. And that's what's drafting up the house prices to be so strong. So what we do is once you get a pre-approval, you'd basically tell your real estate agent, that's me or whoever it is, your wants and needs. We have what's called an agent portal. That agent portal, we can put basically your information in your email, and the second something hits the market, it goes directly to your email. I might be out showing a house to somebody else, and you get a message from me saying, "Hey, a hot new listing has come up," and you're going to call me and say, "Shawna, you just sent me the hot new listing. It's perfect." I don't even know I sent it to you. I've got you on my portal that's sending it to you, so that you are more up to date sometimes than I am. If I did all my work right, we would go out, we'd look at the property. Now properties, for example, even 5 months ago, were taking about 45 to 60 days on the market to sell, and now about 7 or less, depending on if the agent that's the selling agent is holding offers or not. Now, here's a crucial part with what's going on with this game. I call it a game because Ontario is the only province that does not allow us to see what other people have offered on a property. So it is really a guessing game for us. And my job is to look at the property, show you comparables that have sold in the area and say, okay, the neighbor just sold for 350. This is listed at 349. But as where the offering time goes in, I'm going to be notified of how many offers that selling agent has coming in. So if there's none, perfect. Let's try to go about 5% less. But if they have 2 to 3 to 4, then I'm going to try to guess and say, okay, well, they've got 4. What are our conditions? I'm going to go back to Sam and Joe and say, can we go in a little firmer? Can we shorten up our time to get our pre-qualifications? Maybe we want to do hopefully the agent's done a pre-inspection on the property. But at the same time, you might want to just outbid and overbid. And I need to keep you back in the game and keep you backed up to say, okay, there's going to be another one that comes on the market. We don't need to spend $50,000 more on this house just because there's so many offers on the table. Let's back up and try again and try again. And that's my job, is to make sure that I don't make you overpay for that house, even though it is really hard in this market. We may have to a little bit overpay, but with a 15% increase coming up, nobody's overpaying for anything right now. Now, the second part of it is sometimes when you go to Sam and Joe and you get pre-approved, say, okay, well, years to, get your credit back up in order, and your landlord has just told you, oh, by the way, I'm selling the house, you have to get out, and you're stuck. And I know right now Sudbury has 0 rentals available. And if there is a rental, they're asking $2,500 to $3,000 a month for it. It's crazy. So that's where, as Sam mentioned before, there are other options such as a rent-to-own program, where You still do the same pre-qualifications by getting Sam and Joe to, or Terry Lynn, I'll always mention Terry Lynn. I love Terry Lynn. Pre-approve you because we don't want to make sure again you over do yourself by getting something that you won't be able to qualify for in the end. But they do the full pre-approval. We see how long you might need. If you need a couple years until you can afford, but your landlord's kicking you out, you have 3 or 4% to put down. You're not quite there, but almost there. There is the rent to own option that you can go into, where I have several investors that are out there only to see renters become homeowners. That's it. They have no other incentive. It's a very safe way. Now let me just step back a sec. There are very, 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 very many rent-own programs out there that are not legit. So be very careful. The one that we provide is legit, has people and investors that want to see you succeed. And you only want to go into a rent to own if you are years away. If you're only a few months away, wait. If you're years away, it's a way of saving. It's a way of building your Equifax report. It's a way of showing that you can make payments on time. Plus, it's a way of you getting into the home right now before another 15, 20, 30% increase. I have people coming to me right now that said, Shawna, why and do the rent here, and now I'm going to pay $100,000 more for the house that I want to buy last year, and that's my whole point. And with the rent to own as well, when it's in the contract, there's a certain price you're going to pay for the house. There is no change to that. So if you purchase home right now, and the purchase price at the end is going to be $350, that's what you're going to pay. So if that house goes up in the next 2 or 3 years to a $450 price range, you're going to pay $350. And you've been pre-approved by Joe and Sam and Terry Lynn. So you know what your price is. You know you can't go over that. And so that's why it's safe to go into these, because you know what you pre-approved for. Unless, like Sam said, sometimes life happens. And unfortunately, that's the end of all of it. So, life happens even if you have a mortgage or you're in a rent and you lose your job, or maybe you get transferred to BC, like you said, and things change. So we can quickly get it closed, get you out of there, and then you all of a sudden have this equity that you can use to help them get your next mortgage towards your down payment on the next house you want a year or two down the road. Also, I just wanted to say, with the part right now with purchasing with so many buyers, there is limited inventory right now available in Sudbury. I just did 3 this week, and within I'm going to say greater Sudbury area, because Sudbury can extend right out to on the thing out to Blind River, for example. But if I just take the greater Sudbury area with Balcarron, Garson, Lively, Greater Sudbury, just kind of in that area, in about the $300,000 to $350,000 price range, there's 45 listings not sold right now that have just come on the market. That's it. So we do have a lack of inventory happening right now. So getting a pre-approval so that we can maybe bypass that and get one step above the next guy, that's crucial, very, very crucial. And so I hope that that helped a little bit. Another part is with this, that you really do want to have an inspection. However, a lot of people aren't allowing those. They're not accepting them. You get pushed to the side. I do want to say it's kind of important, or check around, have your even a contractor friend or something come with you through the home, because you might have to go into that offer without that condition, and you want to know what you're getting yourself into if you have no knowledge of this stuff. And then another part, I think Sam mentioned this earlier, is a seller's agent is one thing and a buyer's agent is another. I'm both. I sell and I buy homes. However, I don't like to do both. If I'm selling, I'm working for the seller. The seller has told me information that I cannot tell the buyer. If you are the buyer, I know your information. I cannot tell the seller. Like if you were, for example, putting an offer in for 350, but you were prepared to go up to 375, I cannot tell the seller that as your buying agent. But the on the other side, as a seller, I can't disclose things to you as well. So I don't like to work on both sides. And as a buyer's agent, you do not pay a buyer's agent. The buyer's agent is strictly working for you with no fee. So you can use whoever you'd like, but there is zero fees for a buyer's agent. Now, a seller's agent might say, well, just use me, I can reduce the commission or whatever this situation might be. That's great, but they're still obligated to work on behalf of the seller. They're only obligated to provide you with customer service. So there is that little bit of difference there that you might want to seek out a buyer's agent when dealing with that. There's a buyer's agent can also work on your behalf to get that down, and it doesn't always work in your benefit to work with a seller's agent or a private because you don't know what the house is worth. You don't know what the neighbor's house sold for. You don't know the problems. And when you're dealing with that, especially in a market like this where there's multiple offers, um, you have to, it's like a guessing game. So you really have to be knowledgeable about the area. But anyway, I hope that helps a little bit. And I will go back to Sam for questions and answers.
Yeah, awesome. Thank you, Shawna. I think you highlighted a lot of really good points. Again, I don't know if it's ever been more important to have a buyer's agent because of the limited inventory, and you don't want to go in based on the seller, like you're saying, private, when figuring out an offer is dependent on so many variables that you have access to as a buyer's agent.
Right.
So yeah, it's really the new normal, for sure, is definitely a competitive market. But yes, as Shauna was saying, we do want to open it up for question and answer. So if you had seen anything in my presentation, or when Shauna was going through the buying process using a realtor, all of those tips, if you have any questions or anything that you want explained further, feel free to unmute yourself if you want to have a conversation in COVID. Imagine that. Or you can write it in the chat, and that works just as well. But we'll give a bit of time here in case anyone has any questions. Alrighty. So we don't have any at the moment. I was asked in the chat. Someone in the group had been pre-approved before last year with no luck, and they're still looking, but they were wondering if they should get pre-approved again. So even if your financial situation hasn't changed much, it is good just to get pre-approved because, or at least pre-qualified again, with a mortgage agent or broker, because especially if you get a pre-approval, that also does come with a 120-day rate hold guarantee. But also there is a bit of a difference now if you're pre-approved before the stress test increase, because that has changed the qualifying rate from 4.78 to 5.25. So they've equated it to about 4 to 5% of your buying power. So it's important to just get almost like a checkup on where you stand in the market with the new stress test, just so that you know accurately, what to expect. I guess this one might be for you, Shauna. I can read it out. We have a question from Evelyn here. So, is now the right time to buy a house with a $250,000 budget, or should we wait for the market to get better?
Well, like I was saying earlier, like now's a great time because the market is going to increase by another 15% according to the Stats of Canada by fall. So something that, for example, right now is $250,000, you could potentially see that very same house listed today for 250. By the fall, probably will be listed for about 280. So you'll get more of a house now. The difference is that there is a lot of competition out of there because of lack of inventory, and we don't know if that's going to change. It could be even worse come fall.
Right.
So I would say if you're going to buy, buy now. A lot of people are thinking the market's going to crash. It's not in the northern area. It's not for a while.
Yeah, and I think that's something that we've seen a lot, and I'm sure you have too, Shauna, of people that, they even if they have the 5% down, they have an amount they can buy for, but they decide to wait till they can save more and purchase more. But again, in the time that they wait, that average price rises with them, and they find they're still at that almost the same shortfall.
Yeah,
Um,
absolutely.
yeah. We also do have another question here from Samantha. So I'm going on maternity leave. Would you suggest getting pre-approved before going on mat leave, or wait until mat leave is done? So what we can do is we can run your numbers and even a pre-qualification to see what your maximum purchase price would be before maternity leave. Even if you're on maternity leave, some lenders will actually allow us to use your income as long as we have a letter stating your return date, the position, and salary, just to make sure that the finances are secured by your employer before you left on mat leave. So there's a couple different situations if you'll be going back to the same position, or a lot of people, if they were full-time, even if they do go back, they switch to part-time. So that would all be factors on if your income would change. But definitely before going on mat leave, you can definitely reach out to get a pre-qualification. Another benefit to getting qualified after you have a kid is that we can actually use the CCB income that you're receiving towards your household income. So if you're looking to boost your household income with both employments plus extra, yeah, we can actually add the Canada Child benefit that you're receiving each month. But that's a really good question, and great question, Evelyn. And Stephanie had a question as well. So Evelyn does have another question. So this one's probably for Sam. So if I got my parents to co-sign, what benefits does that get us? Will we be approved for a larger mortgage, better interest rates, less down payment needed? So that's a fantastic question. We like to, Joe and I saw an article that was talking about the bank of mom and dad becoming hugely, not even like popular, but hugely required for first-time buyers. So by adding we can even set them up as a temporary cosigner where they're only on title for 1 to 3 years. And we can set it up as well that they are only registered on 1% of title, whereas you and, if you have a spouse or a co-applicant, you guys will be on 99% of the title. So this helps almost sort of sell that, a little less risk. But as well, it allows you to access 99% of all of that laundry list of incentives and grants and rebates that are available to you as a first-time buyer. It will be sort of split percentage-wise. But we have seen that even having a cosigner on that's on a fixed income, if they're on pension and they're only getting, $20,000 a year, up to 30 even, I think 20,000 can affect the max purchase price about $100,000. So it's definitely very beneficial. The only other thing that would really affect it is just to make sure that you can also make the down payment at the higher amount. Because even though, adding an extra income can help the ratio so that you can qualify for more, you will still have to make that minimum 5% down. So it really only affects the purchase price being increased, but you do also have to take into account any liabilities that the cosigner has will be tallied and counted on for your mortgage and title as well. So if they are on a mortgage making payments, or if they have lots of loans in repayment, it could actually be a hindrance more than a help. That sounded like a very political answer. I was giving like a non-answer. But it does depend case to case, but I'll give a firm answer that yes, it usually does help increase the purchase price that you qualify for. The down payment will stay the same, as well as your rate will stay the same as well, as long as you can qualify for the day's best rate. But it's definitely very normal to have cosigners now. It's become hard to apply even, a family with, dual incomes on salary, high paying positions. Sometimes it's still not enough. So cosigners are definitely very helpful. Alrighty. Keep the questions coming. This is great. So much better than me and Shawna sitting here awkwardly and no one asking anything.
Can I go back to that one on the maternity leave?
Yeah, absolutely.
We had a situation actually, I believe Terry Lynn's dealing with this one right now, but we had a lady that they were going to wait. Their mom couldn't co-sign. Both had good jobs, but she was just there, but not quite. She needed about a year and a half to 2 years to get into a home. She decided to go into the rent to own. You guys had already pre-approved her. This is in Aurelia. I'm just going to say Aurelia area. And she did. So the purchase price in 3 years term, which is another 2 and a bit years away, for her, I believe was $399 for this home she purchased. And she ended up, she is pregnant. She is going on maternity leave in October. So she's gone back to Terry Lynn to say our homes increased, our salaries have increased. Do you think we can qualify? And you guys are trying to get her pre-approved now before she actually goes on the maternity leave, which works out. But we just had the house appraised. So her purchase price is $399, 2 years away from now. House just appraised at $525. So
Wow.
that $125,000 worth of equity, you guys are going to be able to use to help her qualify. And she's only been in the program, I think it's 7.5 months, 8 months.
Wow.
So already getting into her first-time homeowner, starting off with rent dome, flipping it over, and already has $125,000 worth of equity in less than a year. That's kind of how the market's going right now, how fast it's going.
Absolutely. And the benefits of using the program with trusted, entering into a contract with trusted investors. Yes.
The difference there is with a lot of the companies out there, I would say 95% of the other companies that try to do rent to own, A, they didn't pre-qualify them, so they didn't know what they qualified for.
Right.
But the B is what they would do at the end is they would have the amount or the appraised value, whichever is the higher. So in this case with this client, even though her purchase price from us was $398, I believe $398 and change, if it was the appraised value, she would have had to pay $525 for that house, which she did not qualify for. But instead, she just made $125,000 in equity, not the investor. She did the renter.
Right.
So that's one of the good things about this program.
Wow.
And again, got pre-qualified by you, the investor purchased us for her, and you guys are getting the mortgage within a year for her.
Wow. That's awesome.
Which is great.
Yeah, a huge boost for first-time buyers, especially in the market today.
Yeah.
Wow. We also have another question, really good one actually here from Stephanie. So what's the difference between the pre-approval and getting pre-qualified? So it's a really good question. So pre-approval is something where we actually will pull your credit and submit it to a lender for them to look it over and then get back to us that it would be approved. A pre-qualified is more of a general figure. So it'll all be based off of just the numbers that you give us when we're chatting. So we won't pull credit. So that's where typically we'll start with a pre-qualification because we can use the income amounts you give us. You can also give us, pay stubs to support that. But then when we're factoring in and looking at your liabilities, you can just go onto your banking site, or if you know how much you owe for, student loans and credit cards, anything like that. And we can run it without having it be approved by a lender. So we can get you a pre-qualified amount in, a 20-minute phone call with myself. And then a pre-approval will actually have to submit to a lender and pull your credit. And those response time with COVID is a little bit longer. It's been, 2 days, maybe 3 before we actually hear back from the lender with your pre-approval. But that's really the only difference. Yeah. So Samantha has another question here. So for the 1.5% for closing costs, is that on top of lawyer fees and inspection? So that's a great question. So lawyer fees, I believe, are included in that rough 1.5%. Getting an inspection, I don't believe it is. That's something that will just come out of pocket. But it's a great question because
it's about $400 for a home inspection.
yeah. Yeah, but closing costs are definitely something to be aware of and make sure that you have that amount saved. But of course, 1.5% is, we still have to make sure you have that amount, but that's before adding any of the benefits that you get, such as the land transfer tax rebate. Land transfer tax is part of that 1.5%. So the rebate will actually help soften that a bit. But again, it's a good idea to just have that saved so that anything that comes up you're able to pay for. Awesome. These are great questions.
There's another question here. I think I see it pop up. How does one start looking? And then it popped away. I can't have to read it for me.
It looks like it's for you anyway, so that's great. So how does one start when looking at the rent-to-own program? And then she's asking, is it during the
exactly
pre-approval
the same
phase?
Pre-approval. Yeah.
Okay.
Yep. You just the mortgage, and it's not too far away that you would, then rent to own's the option. If you would qualify in a few months, then do that. But the rent to own, basically, if you're only looking, that you wouldn't be approved for another maybe 2 years because you're in it, at the end of consumer proposal, or your credit is very low and we have to get that up to a 700. There's all kinds of reasons for rent to own. I believe me, I just, some people just don't even want the house in their name right now because they're going through a bad divorce. There's all kinds of reasons, but the pre-approval is exactly the same. You would still qualify, get pre-qualified through Joe and Sam to see what we can qualify you for, and then once you do, if it's not going to be for years, then you can still go out and look at a house just like you're going to buy it yourself right now. You're on full control of what you want to offer, what you want to ask for, when you want closing date to be, and one of the investors purchases it. And then at the end of the program, you go back to Joe and Sam, say, okay, I'm at the end, I'm going to offer, and they're going to get you your mortgage because you followed their steps to success to get you where you needed to be for the home to become yours. And we call it, instead of you still becoming the owner or the tenant, you're an owner, you're a tenant owner. So the difference, landlord can't come in and say, I'm putting my daughter in the house, or I'm selling the house. You can't have your dog.
Right.
You can't put that fence up. It's just like you have bought it. It's
Mm.
your house, maybe under somebody's name right now, but it will eventually be under yours to become the owner. And it's, kind of free for all. You can do what you want, paint the walls. It's very similar, except for you just don't own it yet.
This is that awkward pause I was chatting about. Okay, here we go. Okay, so now everyone's asking, but if we can get qualified for a mortgage, then stick with a mortgage. Yeah, so I guess what Shawna was talking, if you do go through the pre-qualification and it looks like you can, I'm guessing this is what you're meaning. If you can get qualified for a mortgage, should you stick with just a mortgage? So I guess, yeah, when you're going through the pre-qualification stage, if the purchase price matches, the goal that you had, you have the down payment saved, and your credit is strong enough, then at that point, I guess, yeah, you could just go right in through a pre-approval, and then you can start shopping with Shawna to get to just go for a purchase. But I guess, yeah, it's at that stage that we can sort of make judgment call if rent to own program would suit you better based on, you know, the different factors involved in your pre-qualification.
Yeah, the only reason why you'd want to go into a rent to own is if you need a few years until you're there. If you've been suggested, you all of a sudden get your credit and you realize, oh geez, I haven't checked my credit in years. I didn't realize it was that bad, or there's a hiccup there. Um, you may have been between jobs. You're still in probation of your job. There's all kinds of reasons for it. But if you're going to be, I would say 6+ months away from getting a mortgage on your own, then rent owns the option, especially if you're, in a situation where you're getting booted out by your landlord right now, which a lot of landlords, unfortunately, with the Doug Ford's announcement that tenants, just can't get kicked out or don't want to pay, a lot of landlords are kicking people out, and there's nowhere to go, and you're not quite there to buy your own. So that's the option. But if you're very close, stick with the mortgage, because again, it's always great to just put it right in your own name.
Absolutely.
Are there any more questions? I can't see on the side.
Not that I can
Looks like
see.
you're reading, but I can't read.
Not seeing any at the moment. I'm just giving people time because sometimes they're typing out a big question. I
Right.
don't want to end it too soon. We'll give it a little bit longer.
So there is no silly question. So if you have a question you think it's silly, just ask it, because
That's right.
There is no silly questions when it comes to home ownership.
Absolutely. Especially as a first-time buyer, it's the
Yeah.
Okay, so we got one more from Evelyn. So thanks. So how much do you think a good down payment would be in today's market for Sudbury, like for a $250,000 or $300,000 house? So the minimum down payment that you can use is 5%. So if the purchase price was $250,000, 5% of that is $12,500. So sometimes we'll actually see that it can help if, say, you do have a lot of liabilities. Increasing the down payment sometimes can help you actually qualify for the home because it's lowering the mortgage and the payments on the mortgage. So I mean, maybe Shawna, you can chime in as well, but based on your price range and just a minimum 5%, that'd be 12,500 on a on a $250,000 purchase. So maybe starting anywhere there and up.
Yeah, 1250 to 315,000 plus your closing costs. So, I
Right.
would say anywhere from $15,000 to $18,000 you'd have to put down just from 250 to 300.
Right. Great questions. Thank you, Evelyn. You're keeping us going. Okay, she has another question here. So how to find a great realtor, where to start? Well, you've come to the right place. That's right.
No, seriously though, I am a real estate broker. I am a realtor, and I do think I'm pretty great, but I do have flaws, that's for sure. But you really want a realtor that's going to work on your behalf, going to be able to do like show you property when you're available to show it. Some realtors, are busy on the weekends or whatever. Um, it's really going to be up to you. Find somebody you click with, somebody that's gonna, you know, um, not every realtor is for each other. I've definitely fired clients in my past that I'm just a very, very easygoing person that I like to be honest and tell the truth. I'm going to tell you, like, if you want to go ahead with the property, but I see a problem, I'm going to be right out and say, needs a new roof, it needs this, and needs that. It's about 15,000. Are you okay with that? Like, you need to be okay with this. And are you sure? And I'll fight for you as hard as I can. But other realtors, maybe they spend the weekends on their boat, you know,
Right.
um, or they've got 25 clients on the go and they just don't have time. So really, I'll always say is just find somebody you click with, um, somebody that you can relate to and be open and honest with. Because if you can't be open and honest with your realtor, you don't want that realtor. You just don't, and vice versa. Um, but yeah, it's I mean, there's lots of us out there for sure, but there's certain people that click with certain people. That's all.
Right.
And again, I strongly suggest if you're looking at a house, don't use the selling agent, just because their obligation is more to the seller, not to you.
And we can definitely vouch for Shawna that she's a great realtor. So if you have
I think I live in
realized,
my car. I literally live in my car right now, going everywhere right now. It's funny. Well, I'm at a hotel.
right.
Essentially.
Hmm. Okay, so Evelyn's got back. I think she might be my first call. How long does the house hunting phase usually take to find one? Is there such a thing as casual looking? Good question.
There is. So, like I said, get pre-approved first, um, and then you get on the agent portal, which sends you things directly. You'll get them before they'll hit Realtor.ca. Don't look on things like Zillow and Zillow, and I mean, there's all kinds of companies out there. Realtor.ca is the most up-to-date site with real estate. Um, So if you go on there and you see a house, for example, on Zillow, and you're like, oh, I found this house with a pool, it's only 200. That could have been from a year ago. I got a call actually last night from a property I had 4 years ago for 325 in Angus, Ontario, wanting to book a showing because they'd found on some site um, similar to Zillow. I can't remember what they said it was called. So look on realtor.ca, but once you know your wants and needs, I can narrow that down. For example, I have a lady right now. She only wants Hanmer. That's it. She won't go. She won't look at Valcairn, Valteresa. She just wants Hanmer. So I've narrowed her right down to Hanmer. There's two listings in Hanmer, and one of them is conditionally sold. So she's got the hot sheet. She's gonna know when a listing comes up in Hanmer quicker than I will. And like I'm here actually right now because of her, well, because of my daughter, but because we had showings earlier today, and and I was trying to convince her to go outside of Handler, but I think it's something to do with a school or whatever her reason she needs that property. But like I will, like I said to her, the minute we find it, I'm on it. Like we're already, we've got pre-approvals, we're ready to go. We're just gonna jump all over this. So um, yeah, so again, pre-approval, look on realtor.ca, send a want and needs list of what you need, where you want to live. Some people really don't care as long as it's southern, northern area of Sudbury. Some people are moving out of Sudbury, so where do you need to live? And then you get put on the agent portal that sends you, you can either do it daily, every second day, or ASAP. The second listing comes up as a new listing, it's right sent to your phone. You just got to accept the app or accept my request, and then you'll probably know before I will that the listing's there. And as soon as it comes up, we book a showing and we go through it. But I do actually strongly recommend, especially if that's the area, driving by the house first, because a lot of them, the photographer's very good. You get there thinking it looks like a big yard for your dog, and you get out there, it's about a yard for a cat.
Right.
So you just take a drive by and then go no, or it's right beside a by before you look at all the pictures and just kind of, or Google Earth it even.
Right. Get the wide angle fisheye lens to make it look twice as big.
Rec room that looks like it's 80 by 80 and it ends up being 5 by yeah.
Oh, that's funny. Evelyn says, I think I'm out of questions now. Thank you so much for asking them. Can you leave your contact number? Absolutely. So just put my number in the chat. And if I can scroll up far enough, I can add Shawna's email and phone number if you'd like to get in touch with us. I think that's probably all of the contact info, or sorry, the questions that we have for now. You will be getting some follow-up information in the form of emails from us with any changes that happen, or again, the closing cost worksheet and things like that, because you've signed up for the webinar. So just in closing, thank you guys again for coming out and hanging out with Shawna and myself. It was fun to chat with all of you guys and answer all of your questions. Excited for the worksheet. Thank you so much for all of your questions, especially you, Evelyn. You kept the meeting going. And thank you for your time, Shawna. It was great to be on with you tonight.
Thanks for having me.
Alrighty, so have a great week, everybody, and we will hopefully be in touch. If you want a Tim Hortons gift card, book an appointment with me, and we'll be in touch. So take care, everybody.